Welcome back. You're watching Power Lunch on CNBC Africa. Results out from Harmony Gold Mining today show a dip in production in the 3 months to March, but a small rise in headline earnings to 123 cents a share. Despite the fall in output, the miner has maintained its long-term target of achieving 2.2 million ounces a year in 2012 due to a series of new mines it expects to launch. Joining me now to chat about the results and the direction for the gold price is Harmony CEO Graham Briggs and Peter Major of Katie's Corporate Solutions. Good afternoon, gents. Thanks for joining us. Graham, I'll start with you. A small rise in headline earnings per share, but they did fall slightly short of what analysts were expecting. Why do you think that was?
Difficult to analyse that one because analysts are all over the place when it comes to headline earnings. You know, we're in a very volatile area and different analysts, I mean, there's quite a big variation on what their predictions are.
Yeah.
It's something that we look at, we don't monitor closely, and obviously we don't have any input into that. But yeah, fairly close, not far off what analysts are saying.
I mean, your shares were up quite nicely this morning, and that might be just your debt-free position, which you had promised you would get to, and you achieved that through some sales as well as through, I think, share issues, two share issues over the past time. Yeah. So now debt-free, you have cash of 1.6 billion. How do you plan to utilize that?
Not easily. We're not going to part easily with our money. We've got a lot of projects. I think where we are right now, even at the present gold price of somewhere around 250,000 Rand a kilogram, you know, even we can pay for all our capital, which is good, so operating costs plus all our capital, and our corporate costs, which are fairly small. So, you know, we're in a good place to be. We've got quite a few projects, we've got a pipeline of projects in both Papua New Guinea and here in South Africa. In looking at acquisitions, we've looked around, we haven't found anything that will sort of upgrade the quality of our assets. And where there's some good assets, they're very high priced. So looking around for acquisitions has actually been quite disappointing.
Mm-hmm. Peter, do you agree that Harmony's in a strong position for a gold mining company at this juncture?
Boy, you better believe it. I think this is quite an historic occasion. It must be 10 years since we've seen any gold company in South Africa debt-free. And for decades, our gold mines were literally banks. You know, they didn't know what debt was. They had more money than most of the banks. And I like to think this is emerging from the dark ages the last 10 years. Graham's definitely led the charge here, and I think he's set down a big gauntlet for the other guys to pick up and follow, because it's going to be a lot of work for his competitors to do the same thing.
But of course the problem's sitting with 1.6 billion Rand, not knowing where to spend it.
Boy, I don't know who's calling that a problem besides you, Steve.
Of course, shareholders would like to see that capital utilized, I'm sure.
Yeah, but you know, we need money in the bank. You know, these are uncertain times. Things are happening all the time. And if you want to go and borrow money from a bank, you better put your leather knee pads on, because you're going to do a lot of begging. So in these times, you actually need a bit of money in the bank. There may be opportunities, but you know, we can't run the business on debt. If there's a project out there, we need some money for a big project, then we'll look at sort of loans for that particular project. But our business has to run debt-free.
I mean, you have some quite challenging targets to reach by 2012. You want to reach those outputs that you've already talked about. Can you reach them without acquisitions? Can you reach them organically with what you have?
Yes, that's the plan, to get them organically. Yeah.
And could you utilize some of that money in organic growth of your mines?
Well, we could. I mean, there's some projects that we have that we haven't released. I mean, tailings project in the Free State, a potential another processing of 1 million tons of tailings. We could do that. That's about 450 million Rand or so, the capital to get that going. We could do that, and that would probably add another 50,000 ounces. So there's quite a few projects around that we can add to the portfolio. But our 2.2 is really from our current assets and the growth in those assets.
Mm-hmm. Peter, you've applauded Harmony's debt-free, in fact, cash-positive position. How about the results themselves? What did you make of those?
Look, I think that the results were telegraphed by all the mining companies over the last few weeks, the last month. So, as expected, sounds pretty dull and unimaginative, but I think it was as expected overall. I know there's always analysts who are disappointed. That's kind of their job. They want to raise the bar so hard that the mining companies will try and achieve things that are hard to achieve, but that would be great if they could achieve. But you have to be realistic here, and I think under the circumstances, yes, I wasn't disappointed in it. If they would have been any lower, I would have been a little bit disappointed, because Graham's been in power now for a couple of years. We know he's got a good cash position, so we expect expect a little more out of him than probably his opposition. But having that cash, it just does so much, I know, for the people working on the mine, for the mine managers, the met managers. It's so different when there's a little bit of cash and you've got internal competition for projects. Instead of being told, look, there's a lot of debt, you guys just run the things the way they are. I think it's fantastic. It's really good.
Mm-hmm. Compared to Goldfields' results yesterday, where they managed to keep their expenses nice and tight?
Yeah, I did look through those Goldfields results. Also, it's a large group, and there's so much to analyze. The thing that stood out with Goldfields was definitely their accident rate. And Nick Holland needs big kudos. His whole team needs big hand clapping for that. But as far as the production goes, they were coming off 2 pretty bad quarters, and they were down a lot from what the guidance was of just a month ago. So I would say results okay, but nobody's going to stand up unless you can do a lot better than that.
I mean, your accident rate is something you've been working on, and you do outline in the results today that it's one of the initiatives that you're implementing to address the safety issues at your mines. How is that progressing?
We're doing a lot of work on it. It's hard work. It's changing people's attitudes. There's no magic silver bullet in this game. But there's a lot of hard work going into it. We have definitely not arrived. A lot of the indicators are in the right direction, have not arrived, and we still have to work hard at it.
Mm-hmm. Just looking at the gold price perhaps, and we had a record high rand gold price during that quarter. Of course, since then the rand has strengthened quite a bit. Gold's up and down, it's all over the place. What's your view on the rand gold price and the dollar gold price going forward?
Yeah, I mean, we have a slightly different attitude to the gold price. I mean, we're bullish on gold. We believe it's really a good place to be.
I should hope so.
900 is a good space to be right now, sort of 250,000 rand a kilogram. Great gold price. But, you know, we don't run the business, can't run the business on what happens day to day. So whether it goes up to 920 or goes down to 850 today, it doesn't really change our business that much. We have to look longer term. Now, longer term, we're a little bit more conservative when we plan. So we're planning at 225,000 rand a kilogram, which is you know, you can work the exchange rate.
Sorry, that's down from, what was the average gold price in the first quarter?
Well, the first quarter, the previous quarter it was 253 for us. This last quarter was 293.
Okay.
So we're a little bit more conservative in our planning parameters, but we have to be. You know, we have to be able to pay our capital after producing the results.
Mm-hmm. And you have an unhedged position, don't you?
Completely unhedged.
Well, what's the strategy behind that?
Well, I mean, that's what our shareholders want from us. I mean, we have a variety of shareholders. Large trades every day, 6 million shares of Harmony trade every day. Some people in there for longer term, some people in the morning, probably out in the afternoon. The volatility is huge, and people have views on what's going to happen in the gold price. There's trends that are happening, and people don't want us as management to hedge that position.
Mm-hmm. Peter, do you agree with that strategy?
What, no hedging?
Yeah.
Geez, 1,000%. There's enough variables on a gold mine for management and for fund managers and analysts to worry about without throwing in hedging. If you can show me one instance where hedging helped somebody, I can definitely show you 10 instances where it really, really hurt them. And the examples are all out there. I think the best thing I heard about hedging was Graham's predecessor, Bernard Swanepoel, who said your best hedge is be a low-cost producer. And that should be welded on everybody's front door in this business.
And are you en route to being a low-cost producer?
Well, we're working
producer?
hard on it. And when you're talking low costs, I think Peter's talking about rand per kilogram. You know, and that's part of improvements in grade and improvements in cost and everything to get to rand per kilogram. I mean, that's the best hedge. Put the biggest margin, in other words, between yourself and the gold price.
And that's also one of the initiatives that you say you're addressing as we move forward at the moment. As well as your overall financial position. What else do you want to work on with that overall financial position?
Yeah, I think right now, you know, we've done a lot of changes in the organization. We really need to get those changes bedded down and produce consistent results. I mean, that's where we are. Operationally, a lot of challenges still to do. And that's where we're spending a lot of our time.
Peter, just taking a look at the gold price, where would you expect it to go from here? It has been quite steady around the $900 an ounce mark. But of course, we have seen equity markets strengthen. Does that mean it's going to lose that safe haven status again?
No, but I think it's held up so well through the last 6-8 months that if it won't go up much more with all the catastrophe of the last 6-8 months, I think it's only going to go up gradually from here. But the way the world is printing money and trying to reflate the whole world economy, that can only help gold. So maybe it's not going to go up another 20% a year like it has for the last 6 years, 7 years, but I think it's definitely going to stay ahead of inflation. And yeah, I haven't been this positive on gold in a long time, which means years.
I mean, just taking a look at the results we've seen so far from the gold sector, and I think we're still expecting Anglo Gold Ashanti's next week sometime. What do you think about the quality of earnings this quarter?
Yeah, the quality is getting good now. The earnings we see now, I think, are very reflective of the operations of the different mines. And most of these operations are now bedding down. There's less capex, I think, on our major companies. And so the earnings should grow because less money's being spent, debt's being paid down, but not nearly as rapidly as Graham's done here.
Okay. Peter and Graham, I'm afraid we have to leave it there. Thank you very much for both coming into the studio. That's Graham Briggs and Katie's Peter Major. When we return, Alicia will give us a markets update. Then Business Unity South Africa's Professor Raymond Parsons chats to us about President-elect Jacob Zuma's inauguration this weekend. Don't go away.